Hi everybody, Jeff Yasteen here. You know, if you bought Facebook shares on March 10th, when I noted that I cannot believe how cheap Facebook stock is, well, congratulations. Your profits may be even larger if you considered buying the stock in the week after I recommended it, in which the shares fell even further thanks to Wall Street's panic selling. And yes, you could sell and now reap a gain of as large as 40% over the last 2 months. But if it were me, I would continue to hold Facebook shares here for bigger gains just a little further down the line. In fact, I'd consider it a gift from the market gods and buy more if the stock falls substantially below the current $200 stock price in coming weeks. You see, Facebook stock is incredibly cheap even after the big rally we've seen since mid-March. You know, Wall Street analysts expect the company to earn $7.50 a share now in profits this year. Divide that current stock price by that number and you come up with a price earnings ratio of around 24 or 25. And basically what that says is that investors expect the company to grow its annual earnings by about 25% a year. And yet analysts are still projecting that Facebook will earn as much as $9.93 a share, almost $10 a share in profits in 2021. And that's a 32% jump in annual profits. Now that's important, an important number to keep in mind. So that's one clue that Facebook's cheap stock value and its existence right there. Given all the fear and bad news out there about the coronavirus, it says that traders are unwilling to assign an even slightly higher price earnings ratio to own the stock. And if they did, the shares would reflect that by trading a lot closer to, say, $240, which is 32 times the $750 in annual profits it'll earn this year, instead of trading right around $200. But frankly, there's another reason to own Facebook right now, and that is the upcoming political elections in November. With traditional campaigning techniques being rather limited because of the coronavirus situation, I expect political ad spending by alternate means. So we're talking about social media, streaming media, broadcast TV, and of course the old standbys of billboards and that sort of thing become even more important in the months to come. According to the Center for Responsive Politics, spending on political ads just for the presidential election alone ought to hit a record $10 billion. The old record was set in 2016 with $6.8 billion. And a big chunk of that spending will go towards digital ad buys on Facebook. But the money, it tends to come in sometimes unpredictable waves, depending on the campaigns and the ebbs and flows of candidates' political messages and how voters respond to those messages. So as a result, the spending is notoriously hard to model on a spreadsheet, and so the true impact of political campaign spending, I believe, just is not reflected in Facebook's forward earnings right now. And with all that in mind, let's take a look at the technical status, the technical analysis status of Facebook shares as well, because that is also a key component of whether you would want to buy the shares, hold them, or sell them, for any stock for that matter. So, we're looking here at Facebook, basically going back through, last October to the present day. And, you can see where the stock has basically gone sideways. And in fact, if you zoom out even further, basically you can see that by extending this chart all the way back to 2017 and then some, you can see that here the shares have basically been going sideways, trading in this wide band between around $218, $220 a share to as low as $120 a share, going back about 36 months or so, or nearly thereabouts. And when you consider that, in fact, it is 36 months exactly, 3 years. So when you consider all that, what that says is that Facebook is sort of building strength. Think of it like a runway at an airport, and you have a big commercial jetliner that is lined up on that runway and ready to take off. Well, that's what's happening here. Facebook and Facebook investors are building this long runway for the shares to take off again, I think, within the next 12 to 18 months. When you see this sort of long range here, especially in a stock like Facebook, which has a very secure business model. You know, it's not like a cyclical sort of business, and it's not the kind of business that is destined to change radically, that somehow means the company isn't going to be able to earn more and more profits in coming quarters. This is a really good sign. You want to buy stocks like this one with this kind of financial metric behind it in order to benefit from these sorts of gains. And when you have a stock like this in this long, wide trading range, that's actually a really good thing, especially when you can pick the shares up at the lows. And of course, that's tough because anybody who has invested can tell you how hard it is to buy a stock when it's heading lower, such as what I recommended for Facebook shares back here, where I have it in the red circle here back around March 10th, March 11th. And you can see in different points over the past 36 months, where back here in early 2018, the stock fell to $150 a share. At the end of that same year, going into the beginning of 2019, the stock dropped to as low as basically about $119, $120 a share, before then rallying all the way back to where it was in January of this year, and then falling all the way back down to 140. And with likewise this amazing rally back up to above $200 a share. All this is a good thing. It shows that this company with Facebook continues to generate profits. And in fact, we can see that if I also then go to this chart here, and this is from a company called Capital IQ, which is a division of Standard & Poor's. And if we zoom in here, and I'll see if I can do that. If we zoom in on those profit estimates, you can see here, and that's this line, let me boost up here, where it says earnings per share normalized, right? 2019, the company earned $8.56 a share. And then if we slide it over here, 2020, expectations of $7.50 a share, $9.93 a share next year, $12.30 a share in 2022, $14 a share in 2023, and onwards from there to above $16 a share in basically the next 4 years. So with all that in mind, again, we are talking about a stock that continues to build profits on the sideline. You know how Warren Buffett was complaining over last weekend that he just didn't see much in the way of certainty and didn't see many stocks to buy? Facebook is a stock that Warren Buffett ought to be buying. It is in many cases the perfect 21st century media stock to own, just the same way that the TV networks, such as Capital Cities, which is now ABC, and of course is owned by Walt Disney Company, those stocks were the great stocks to own through the 60s and 70s, 80s and 90s, because they were seeing massive growth. Facebook is doing the same thing now. Now, why Warren Buffett wouldn't buy Facebook when he will buy Apple, I'll never know. And he's expressed plenty of admiration for other technology titans like Jeff Bezos as well. So to me, Facebook is a stock, if Warren Buffett, perhaps maybe if he were a little younger, would be buying the shares, we ought to be buying the shares here as well, because as great as this rally was that I'm zooming into here, from a low of 140 or 139 at the very bottom of it, all the way up to $203 as of Monday, is a great rally to see in a company which is performing very well in an economy which obviously has a great deal of question marks about it regarding the coronavirus. So to me, I see Facebook as in many ways the sort of last FANG stock standing. Remember FANGs? Facebook, Apple, Amazon, Netflix, and Google. And all of these stocks have either fallen less than the overall market or gone up higher than the overall market in this rally. And I think Facebook, frankly, has the capability here to do the best of this entire bunch because it has a low debt position. It continues to earn lots and lots of money. And even in this sort of coronavirus atmosphere, what do people do? What do we all do? What are companies doing? They're all getting together, they're all talking, and they're using their online media to do that. Facebook is the way that many of us, maybe not so much on the enterprise side, but certainly on the personal side, That's how many of us stay in touch. And I don't see that situation changing anytime soon. So think about where Facebook's profits are now. Think about where they'll be next year and the year after that and the year after that, and you can see why Facebook is such a great stock to own. Now, there's one final thing I want to point out to you here before I wrap all this up, and that is that there's trillions of dollars coming down the line from the Federal Reserve and the federal government to help sort of cushion the blow from the coronavirus. And if we keep in mind that Facebook is going to be earning nearly $10 a share next year, more than 32% above what it earns this year. Keep in mind all that trillions of stimulus and the fact that once that stimulus starts going out into the economy, it takes a good 6 months or so sometimes for these things to get going. All that means that I think we can expect both the economy to bounce back, and we're also going to see the overall advertising environment bounce back as well. And of course, that's a key for Facebook and for its earnings to move even higher. So here's what I think is going to happen over the next 12 to 18 months. As this whole situation plays out, it takes Wall Street analysts some period of time to sort of warm back up to a stock in a situation like this. Somebody like me, I can talk about, hey, we're going to have this bounce back coming in 12 to 18 months. And quite often, Wall Street analysts, especially after having been burned once because of the overall kind of flare-up here of the coronavirus, they're going to hold back. They're going to hang back because nobody gets ahead on Wall Street by taking these these great independent positions. It just doesn't happen that way. So once all this comes into play, it becomes more obvious that it's going to happen. We know it's going to happen, but the data doesn't reflect it yet. Well, once the data does reflect it, you can expect these Wall Street analysts to all come flooding back in with strong buy recommendations. And then instead of wanting to own Facebook shares at a PE ratio like now, at a PE of say 25, then they're going to start saying you ought to own this for a PE ratio of 30 or 35 or 40, which is sort of the outside boundary of Facebook's sort of earnings growth here going forward. And so because of that, this stock remains very, very cheap, both on an absolute basis and on a relative basis. And it's a great position here to own because there's no doubt there's plenty of challenges for the economy right now, but it also means there are plenty of opportunities to benefit all of us as stock investors. And in my view, Facebook is a great way to accomplish just that. If you like what I'm talking about, make sure to follow me both here on YouTube by subscribing to my channel, as well as on all of our social media. And until then, I'm Jeff Yasteen, wishing you the best of good buys.